Hi and welcome back. In this part of the video training, we are focusing on building a risk-balanced crypto portfolio. We will learn how we can manage risk and the size to grow a balanced crypto portfolio. First of all, we have to talk about why should you actually balance your portfolio. There is extreme volatility. Crypto markets can swing dramatically. Losses happen suddenly and severely. If you're just in one asset and you get a swing like that and the asset is part of the swing, you can lose a lot of money. Very likely, if you split it up in more risk, less risk, and medium risk assets, these swings are not so heavy and will not impact you so much. It's a risk protection. Diversification spreads risk across multiple assets. This stabilizes your returns. Performance insurance. Balanced portfolios protect against poor performance in any single asset. Bitcoin is mainly the leading asset. Almost all the assets follow Bitcoin. If the Bitcoin price goes down, it's very likely that most of the other assets will also go down. There's always exceptions, and you can find these exceptions and have some in your portfolio. To establish our balanced portfolio, we need to understand the crypto risk categories. There's very high risk. This is new coins, small market caps, and emerging sectors. We have medium risk. This is already established projects with a growth potential. And finally, we have the safe assets. These are the large caps and the really established blockchains and currencies like Bitcoin, Ethereum, Solana, and so on, mainly layer 1 blockchains. Let's dig into some of the safe crypto assets as an example. I mentioned already Bitcoin. Why is Bitcoin safe? It has got a very large market cap, over 1 trillion, and it's the first original cryptocurrency with a very strong adoption. We see now big players coming into the market, ETFs, investment firms, companies, states, everybody's getting into these assets. This can be considered as very safe in the crypto market. The second one is Ethereum, high adoption rate, core platform for decentralized finance applications. Ethereum is still mainly used for these applications. Solana is slowly coming in and taking over a share. Ethereum will get a staking ETF, has already got a regular ETF. This can also be considered as quite safe asset. Keep in mind, still, if the asset is classified in crypto as safe, you can experience heavy drawdowns. We have seen Ethereum going from 4,000 to 1,700 or something at the lowest point some weeks ago. Keep that in mind. But this is not an asset that will go to zero. This is an asset where you can buy if it's dropping to these low levels. This is an asset that it can still buy if it really dramatically drops to these levels. At least at the moment, it's quite safe, and I'm quite sure it will go up and reach around 6,000, 7,000. Some people say even 10,000 this market cycle. A separate category I also want to talk about are the stablecoins. Stablecoins are USDT, USDC pegged to fiat currency. This is not really the best solution. And first I want to say, if you are in Europe, you're not allowed anymore to hold USDT. So you have to hold USDC or any of these other dynamic stablecoins. Stablecoins are not the best solution because they are inflating. They are pegged 1-to-1 to the dollar. So $1 is 1 USDT or USDC. If the inflation is going up, also the buying power of your stablecoin will go down. Just keep that in mind. But still, if the market goes down 50, 60% and you have a portion in stablecoins, then you are not losing that much money. And also, you have the opportunity to use your stablecoins to buy assets when they're very low. It is always a good idea to keep some assets in stablecoins. What are some examples for medium risk assets? Generally, we can say it's layer 1 blockchains, more established blockchains like Solana, Avalanche, Cardano. Look at the first 10 or first 15 on CoinMarketCap. Look at their market cap. Look how much money is flowing into them. Have a look, how are they established? How long have they been around? What projects are going on them? Have they got lots of developers and so on? This would be some safe place. Also DeFi protocols like Uniswap or Aave that are around for quite a long time and have really a purpose. These really working platforms that bring a lot of value and also make a lot of revenue. The third category for the examples would be the utility tokens. Utility tokens, this will be coins like Chainlink or Polygon. Especially Chainlink, I believe, will have quite a good time in the next years. Chainlink is established since a very long time already, is now slowly crawling up to the top 10 of CoinMarketCap from a market cap perspective. Keep an eye on Chainlink. The last category we need to talk about is high-risk crypto assets. And there are thousands of examples, but let's dig into it. What is a high-risk asset? Low-cap altcoins, emerging DeFi NFT protocols with small market capitalizations. Also, all the meme coins, all the AI agents are going into that category. Early stage tokens, recent launch with limited track record and low liquidity. On pump.fun, it's a platform where everybody can go and in seconds create his own meme coin or his own crypto coin. With projects or with platforms like this, you have to be very careful not to FOMO in. You really need to understand the market and you need to understand who creates it, what is the track record, and so on. Experimental projects, meme coins, and bleeding edge technology experiments. We talked about the meme coins already. You may know the Trump coin, the Melania coin, the Popcat, the Dogecoin, the Fart coin, all of the things. There are opportunities to make a lot of money, but you really have to understand how it works. You don't want to be the last one standing when the music stops playing. All chairs will be gone. You will be the bag holder and everybody sold. You don't want to be the last one selling the assets and having a lot of losses. I prepared the allocation model for you. This is just an example. Depending on your risk, how much risk you're willing to take. When do you need the money? How old are you? Are you using it as a retirement fund or are you just gambling around and need some money for next week? This depends very much on your needs, your risk appetite, your trading model, your portfolio depends very much on your needs, on your age, and so on. In this model, it's about 60% safe assets. It would be Bitcoin, Ethereum, Solana, for example. Then around 25% of medium risk assets and the rest high risk assets. This is just an example. We will dig later on into some details how you can actually split it for different needs. What is also a good idea is to diversify by sector. You don't have all the coins in one sector. There's always a narrative in the market. That means one time the AI narrative is very hot, then there is the real world asset narrative, then there's the meme coin narrative. Everybody is then swapping to Bitcoin. You need to be in the right asset group. And if you diversify between these groups, it can also be very positive for you and keep you away from big losses. You could go into NFTs, digital art, gaming, metaverse. You could have some assets there. You can own NFTs or you can just invest into the platforms. You can have some exposure to gaming platforms and to the metaverse. You can even buy land in some games and so on. This is a way to diversify. I wouldn't go too much into that sector. It is not really booming at the moment. At the moment, it's not really time for that. If you believe in digital art, it's the time now to buy into digital art because it is a little out of favor. But I'm sure that especially this early art that came out, the CryptoPunks, the Bored Ape, and all this stuff will shoot up. Pingu is one of these assets that is slowly coming into the market. This would be interesting for you to get into. You could also go into the sector which we call smart contracts, which is automation, oracles, and infrastructure. Chainlink would be an example of an oracle. Infrastructure could be wallets, it could be Uniswap. Automation can be all these new AI trading bots or something like that. Established layer 1 platforms are still one of the safer places. We have Solana for that, Ethereum, Cardano, lots of layer 1s. DeFi projects would be something like a lending platform. There is Nexo out there. There's exchanges. Almost all of the exchanges have the token, the BNB token for Binance, OKX token. Like I said, almost all these exchanges have tokens that will probably perform quite well whenever there's more and more people coming into the industry. There's also yield farming. You could go into a new protocol like Pendle. You can invest in a newer stable coin like ENA, so ETHENA. These are the sectors. This slide should just show you that it is possible and advisable to go into different sectors, no matter what it is. Don't have all your eggs in one basket. Adjusting for risk tolerance. Conservative investment would be 70 to 80% in safe assets. It can even be higher. 90% really depends on how much risk you want to take. 10 to 15% in medium risk assets, 5 to 10% in high risk assets. This is usually the best approach for new investors, and generally this is the approach that I would recommend to everybody if you have a little longer time frame. A balanced portfolio is 55 to 65 in safe assets, 20 to 30% in medium risk assets, and 10 to 20% in high risk assets. It's suitable for most investors with modern risk tolerance. An aggressive portfolio would really be 40 to 50% in safe assets, 25 to 35 in medium risk assets, 20 to 30 in high risk assets for experienced investors with long time horizons. For experienced investors with a long time horizon. What are some best practices in portfolio management? Dollar cost averaging. Invest in regular intervals rather than all at once. This reduces timing risk. Maintain liquidity. Keep a portion in stablecoins for opportunities or emergency needs. This is an important point. Research fundamentals. Regularly review projects, development teams, updates, and adoption metrics. Like in traditional finance, if you're managing a stock portfolio, also in crypto, you need to rebalance sometimes. Some projects are getting taken over by other projects. Some narratives are falling behind. Other narratives are coming up. You need to be in the right narrative, at least with your more risky asset portfolio, to make the most out of your dollars. What is a good rebalancing strategy? You need to schedule your reviews. Set quarterly or annually portfolio review dates. Realign your assets. That means buy or sell to return to your target allocation percentages. Sometimes you will see that one of your sectors are performing very well, but then the percentages of this sector is actually totally out of balance. You need to rebalance your portfolio to keep the risk that you established at the beginning sometimes. Evaluate the performance. Which asset is overperforming and which asset is underperforming. And then you need to take a look if you should change anything or if your portfolio is still okay. Adjust your strategy. Modify allocations based on market trend and goals. What is the summary and the key takeaways of this part of the presentation? You need balanced risk levels. Mix large caps, quality altcoins, and small caps for optimal balance. Personalize your approach. Adjust altcoins to fit your risk profile and market condition. Also adjust the assets according to your interest. If you're interested in AI, it's much easier for you to research this field. And it will be a better asset for you if you're personally interested in this asset group. Diversify strategically. Spread investments across sectors and rebalance regularly. Focus on the fundamentals. Make decisions based on research, not on emotional hype. This is very important. Never decide with your emotions. Make sure you have metrics in place. We have already talked about the RSI indicator, the M2 money supply, the rainbow chart, and other metrics that can help you to make decisions without emotions. I see you in the next part. Bye-bye.